Hello friends, this is your friend Bhushan with another edition of Daily News Analysis. In today's session, we are going to discuss some very important articles that were featured in the Hindu and Indian Express newspaper today, as we daily do. In our normal format, in explain section that is important for prelims, we are going to discuss very interesting and very important articles about and very good news also. The first and foremost is DIIs surpassing FPIs in ownership on NSE. Very important news. Although this news you can use it sometimes in GS3 answers from the perspective of mains, from the perspective of prelims particularly, you must know what exactly FPIs are different from say DIIs. At the same time, how FPI is different from FDI also. So the differentiation is very vital from the perspective of prelims. The second article that we are going to discuss is again about economics, and it is about insider trading and recent SEBI action regarding that. Okay, so we are going to discuss the basics of insider trading, the meaning of it from the perspective of prelims and the SEBI regulations as well. In the third article, and very important article from the perspective of prelims as well as mains, is about the issues in terror financing. So currently India is actually sort of lobbying these multilateral development banks so that they can hold the Pakistan accountable for its terror financing. We are going to discuss very important institution that is called FATF from the perspective of global terror financing, its mandate, its listing and all those things. Another important article that we are going to see is about brain-computer interface. So essentially we are going to discuss what exactly is this technology and what is latest from the perspective of prelims in that regard. Particularly in the decoded section, we are going to discuss very important and very interesting article. Often you will find PYQs on this particular section in GS2. It is about strengthening India's parliamentary oversight. So very important article, very interesting article from the perspective of our own parliamentary system and its functioning. So stay tuned. So the first important article that we are going to discuss is about the DIIs upstaging FPIs in ownership in National Stock Exchange. Particularly this news is featured in the Indian Express newspaper. It is important from the perspective of our own economic growth, from the perspective of stock market and the recent trends in FDI, FPI, etc. From the perspective of prelims though, important is to understand the difference between FDI and FPI, how they are different from the perspective of investment, the ownership as well. But before going too deep into those aspects, let's see what exactly is this news. So this news, very important and very interestingly, it says that after 15 years, domestic institutions upstage FPIs in ownership of listed stocks on NSE. Very interesting and very important. See, DIIs are essentially domestic investors. So essentially, currently they hold more ownership stakes in NSE. So currently they hold around 17.62%. Okay, you can see this graph here. Effectively, it shows that FPI's share, FII, particularly FPI, FII are essentially, to certain extent they are similar. You can clearly see that FII, foreign institutional investors share on NSE getting reduced to currently at 17.22%, while you can see the domestic institutional investors share getting increased to 17.62%. So this is very interesting. What it also shows is our own resilience when it comes to domestic investment. So essentially it shows the enthusiasm and also optimism of our own domestic investors in India's economic growth. Okay, so in a way what this news also conveys is essentially in the stock market the volatility will be reduced due to this aspect. Why? Because most of the time you must have seen, where at the first sign of some sort of economic panic, most of the time these FPIs and FIIs take flight from the Indian markets. So currently our own domestic investors will be much more heavily investing in the stock market. So essentially, in a way it will reduce our dependence on the FIIs in particular. So in a way it will also reduce the wild fluctuations that we used to see in the stock markets. hopefully we are further going to see gains in domestic institutional investors, particularly mutual funds that article says are going to tremendously invest in our own stock market particularly. Okay, so very interesting and very good news, I will say, from the perspective of economy, from the perspective of prelims, mains, whatever, the analysis is there. So let's see some key highlights. So we have already seen the news, what exactly is this news. Let's see now some key highlights which are there in that particular news. So essentially DII shareholding growth, obviously it shows strong shareholding growth. It increased its stake from 16.89% in December to 17.62% by end of March 2025. Very interestingly, very important, DII share, domestic investors share in ownership has increased. So driven by the net investment of almost 1.89 lakh crore. Very interesting, very important DII growth is there. It has been observed. Another is, it is powered by retail investor participation. Okay, very interesting. Many times the surge in DII shareholding is attributed to a significant rise in retail investments through mutual funds and systematic investment plans. So mutual funds and SIPs are one of the foremost reasons for such type of growth. As I earlier said, mutual funds themselves it is estimated that mutual funds themselves are going to surpass the FPI, FII investments in near future. Okay. Market dynamic shift. Obviously, we can clearly see that historically, FPIs played a dominant role in influencing market trends. That is true, very true, because why? Because most of the time, FPIs and their investment are instrumental when it comes to the market trends. So the sentiments, global sentiments, most of the time, also due to those global sentiments also, we used to see the fluctuations in the stock market, and which are wild fluctuations. But now FPIs will play a reduced sort of role when it comes to market dynamics. Okay. Now DIIs are stepping in to absorb FPI sell-offs, providing stability to the market. As I earlier said, it will create much more stability going forward, because we will be able to reduce our dependence on these foreign portfolio investors to the certain extent. Obviously, they are still important, but essentially our domestic investors are stepping up, okay, so that the volatility and the fluctuations, wild fluctuations in the market gets reduced. Okay. See, from the perspective of prelims, another important thing to understand how DIIs, domestic investors, are different from foreign investors. Okay, so let's see what some key points of differences here in this chart particularly. Obviously, definition wise, Indian institutions that invest in domestic markets are DIIs. Foreign entities investing in Indian financial markets are FIIs. Very interesting, very simple definition is there. Examples being, you can see LIC is there, SBI is there. LIC in particular is the largest domestic investor in our own stock market. Very important, institutions. We have seen LIC related news in recent times a lot as well. So what are some famous FIIs, foreign institutional investors? BlackRock is there, Goldman Sachs, Morgan Stanley is also there. Okay, origin obviously based in India and based outside India. FIIs, when it comes to FIIs. Market impact. See, market impact, domestic investors and domestic investments are much more stable and long-term investments. See, DIIs most of the time takes the view from the perspective of long-term economic stability and economic growth. But on the other hand, FIIs actually cause more volatility due to large inflows and outflows. There are always fluctuations, and most of the time we have seen the sell-offs in FPIs particularly. Okay, and that creates wild fluctuations in our own stock market, and that in a way harms our own economic growth. That is the general sort of market impact that is mentioned here. So particularly, see, the investment focus is also important here, primarily in Indian companies and Indian assets. Generally, domestic investors prefer Indian companies and Indian assets, while FPIs, in particular FIIs, also invest in Indian equities, bonds and other financial assets as well. Okay, so they have larger basket. Particularly, regulatory body, who regulates domestic investors? It is obviously, there is a dual regulation by CBI and RBI. There are CB rules, there are RBI mandates and rules as well. Mostly FIIs are regulated by SEBI and they must comply with foreign investment norms given by RBI and also SEBI. Risk appetite, obviously domestic investors are much more conservative with focus on domestic growth, but FIIs are much more speculative with focus on global trends. So globally, if there are global market fluctuations, accordingly we will see FPIs and FIIs sell-offs in our own markets as well. Exit strategy generally long term. See, as I earlier said, DIIs are almost long-term investments. Okay, they look at India's growth projections, India's economic potential from the perspective of long-term investment, while FIIs are more fluid. Okay, obviously the profit making is the foremost thing when it comes to foreign institutional investors. So at the slightest risk, they tend to flight. Okay, this is the case. So now from the perspective of prelims, another important thing to understand is how FDI is different from FPI. FPI, FPI, FDI, one of the foremost parts of foreign institutional investments particularly. But how FDI is important from FPI, already you have UPSC asking the previous year, asking the questions in prelims regarding the difference here. So essentially, let's briefly see how FPI is different from FDI. Very important from the perspective of prelims. So take note. So involvement, when it comes to FDI is involved in ownership, control and management with long-term interest. Very interesting, very important. Okay, FDI is involved in ownership, long-term interest. Okay, while FPI, particularly foreign portfolio investment, they have no active involvement in management, investment instruments that are more easily traded, less permanent and do not represent controlling stake in enterprise. So they are short term. In a way, the FPIs in particular focus on short term sort of gains. FDIs are more long term. They look into more ownership aspect and management control goals as well. Okay, there can be management control or there may not be management control, but ownership stake is what preferred in FDI. When it comes to form, when a company invests in a foreign country to set up a production of or some other facility, as I correctly said earlier, FDIs are more long term. So they look at the company from the long term perspective, so that they can invest in the production process or some other facility, so that there can be capital creation as well when it comes to FDI investment. But FPIs are when a foreign company purchase equity or company through stock market. So mostly FPIs investments are through stock market and equity and debt. Okay, so from that perspective, FPIs are much more volatile and volatile investments in market. Degree of control enables a degree of control in the company. True, very true. FDI enables degree of control, but on the other hand, FPI is no control in the company, not at all. Obviously, they do not take ownership. They just focus on equities and debt instruments. Okay. This threshold is also very, very vital. So from the perspective of threshold, when it comes to FDI, any investment of more than 10% is considered FDI. 10% of what? 10% capital investments. Okay, more than 10% of the capital investment is considered as paid up capital, particularly is considered as FDI. But while FPI is allowed to invest up to 10% of paid up capital, up to 10% FPIs, it is called FPI, it is allowed. Okay, sell off, pull out, more difficult to pull out or sell off. Why? Because there is ownership involved. A lot of the times there are assets as well which are invested through FDI. So it is much more difficult to pull out or sell off, while FPIs being very equity and debt centric, it is fairly easy to sell securities and put out because they are more liquid. Okay, it comes from generally tends to be undertaken by multinational organizations, foreign enterprises when it comes to FPIs. See, another most important thing to understand, the point of difference here is what is the contribution? Contributes significantly to the growth of the economy. Okay, FDI is much more important. So that's why we see most of the time, our finance minister touting essentially the FDI investments in India in recent years. We have seen many state governments also, actually trying to have those sort of investments in their own states as well. So, most of the time FDI flows indicates the robustness of our own economic growth, our own economic fundamentals, while FPIs are results only in a capital flow through stock market or through equity instruments. Okay, so most of the time they are much more volatile. FPIs are much more volatile, while FDI is much more stable. That is major point of difference. So, we have discussed from the holistic perspective the important terms which are mentioned in the article. So, based on this understanding, just comment your answer to this particular question in the comment section. Very interesting, very important question. If you understood the article correctly, you will be able to solve this particular question. The next important article that we are going to discuss is about insider trading. Okay, so what exactly is this news? Is SEBI accuses Adani Keen of insider trading he seeks to settle. Okay, so essentially it is the news which is about insider trading. Okay, now per se the news is not that much important, but you must know from the perspective of prelims what are the regulations when it comes to insider trading. What exactly is called insider trading also is very important aspect of this particular article. Okay, so essentially, this particular slide here addresses what is the meaning of insider trading. So, insider trading is the buying, selling or dealing in securities of a listed company by a person who has access to unpublished price sensitive information about the company. So, essentially, in the simplest of terms, it is the access to the information beforehand. Okay, before actually selling the stocks or before the listing itself, so that in a way through that information that person can take the maximum benefit. So that is sort of called insider trading. Okay, it is in simplest terms I told you, but what the Patel committee said is it defined insider trading as the act of trading in a company's share by those in management or their close associates based on undisclosed price sensitive information about the company's operations that is not available to the public. Very interesting, very important. As I said, the information per se is not available to the public, but if someone knows that information, they will know exactly what to invest in and when to invest in that company. Okay, so essentially if they misuse that particular information and accordingly benefit from that particular information, particularly that is what is called insider trading, and it is essentially banned by SEBI. It is rather regulated by SEBI because there is types of trading, insider trading in particular. So those types are very interesting and very important. You may not have heard these types. So very interesting discussion about the types here. So types, there is a legal insider trading as well. So can you imagine, there is insider trading which is legal as well. So essentially insiders buying, selling stock with proper disclosures. This is the case, through proper disclosure also the insiders can actually buy or sell the stocks. So that is essentially legal. See, insider here is very specifically defined, okay, by SEBI. So just wait for a minute. We will go into that detail, who is called insider and who is not also, but we are not going to go too deep into that aspect. But let me tell you, insiders are essentially the people in managers, their immediate relatives as well. So by the way, these I have told you this in a very rudimentary manner, but all these terms are specifically actually defined by SEBI. See, from the perspective of prelims, you do not have to know who is insider or who is not. Particularly, the specifics are not important, but in general, you must have the idea. Okay, so it is not just the manager or the person in the management who is considered insider, but their close relative, immediate, connected person also is considered insider from the perspective of SEBI regulation as well. So you must remember this particular fact from the perspective of prelims. Particularly, there is illegal insider trading, obviously. Executing trades based on confidential information. So the information, if it is confidential, not disclosed at all, and you are on that information, someone is misusing that particular information for gains, then it is illegal. Obviously, there is tippy trading as well. So tippy is a person uses tippy, UPSI received from an insider to make profit. So what exactly is this UPSI? So this UPSI is unpublished price sensitive information. So unpublished price sensitive information is UPSI. So if the TP, the person uses UPSI received from an insider to make profits, that is tippy trading. And what exactly is tipping? When insiders pass on sensitive information to others, leading to indirect insider trading. Okay, so essentially tippy, if the insider tipped someone about that information, that is called tipping. Okay, so what are some SEBI regulations? So let's briefly see what are the regulations when it comes to insider trading. So SEBI prohibition of insider trading regulations 2015 are there. So let's see some key features of it. So essentially there is they have expanded the definition of insider. Okay, so per se you do not have to go too deep into the definition of expanded definition rather of insider now. As I said, it is not just the people in the management, but their immediate relatives and connected persons as well who are considered insiders. That much is enough information from the perspective of prelims. Otherwise, you will get confused. Okay. Mandatory disclosure of trades by insiders and trading plans. Very interesting, very important regulation is there. Establishment of code of conduct by listed companies. So there should be code of conduct to manage the insider trading. There is provision of penalty and prosecution as well. So under SEBI Act, there is a penalty and prosecution. There is criminal penalty as well. So there are amendments in 2019 and 21. So what those amendments did, they introduced informant mechanism with monetary rewards. So essentially now if someone has the information, they can report accordingly to SEBI about the irregularity and illegality of insider trading in that particular company. Okay. So reduced disclosure timeline of 2 trading days, more clarity on contra trading by selling within 6 months. Okay. See the contra trading, just go through it. Very interesting, very important. There is algo trading as well. Algo trading. You must know these terms. Okay. So both these, get affected by lot. They get affected a lot by insider trading. So that's why, understanding the algo trading and contra trading is also very, very important from the perspective of prelims. What are some penalties under Indian law? Obviously, SEBI Act, the penalty of 25 crore, it is there, and 3 times the profit. What is the criminal liability? Up to 10 years imprisonment under section 24. So see, if in prelims, if the question asks, under insider trading, there is no criminal liability. There is a criminal liability in insider trading. If someone is found to be involved in insider trading, he can be sentenced to 10 years imprisonment under the act. So this fact is very interesting and very important. Most of the time what happens, these offenses are considered civil offenses in general parlance, but it is a criminal offense as well under SEBI Act. So that you also must know. It is not just civil offense, it is a criminal offense as well if someone is involved in insider trading. Okay. So let's see some committees on insider trading. See, per se, you do not have to know the specific points of each and every committee, but from the perspective of prelims, you must know the committee names so that you can get the hints whenever directly there is a question on the which of the following committees are involved in insider trading or something like that. So the questions on those line, because of insider trading most of the time is often in news. So that's why the committees associated is also very important from that perspective. So the first attempt to curb insider trading in India was made in 1948. So very interesting. Way back in 1948, the efforts were made with the appointment of Thomas Committee. So first committee sort of in 1948 was Thomas Committee. And based on its recommendations, section 307 and 308 were incorporated in Companies Act 1956. There is Sodhi Committee post that in 1986. It recommended initial framework for insider trading, SEBI's powers, set the stage for SEBI's powers. There is Narayan Murthy Committee as well in 2013. It was actually set up by SEBI. It suggested clearer definitions, stricter norms, principle-based approach over rules-based. Okay, so why not rules-based and why principle-based? In general, you see many times rules-based approach is much more strict and very very rules-centric. But insider trading is most of the time is evolving as well with the evolution of technology, with the evolution of AI as well. So most of the time, this particular committee, to tackle this particular volatility in insider trading, or frequent changes in insider trading, suggested principle based approach, okay, so that they can be much more targeted and much more specific. Okay, there is Justice N.K. Sodhi committee as well in 2013 itself. Again, most importantly, there is Uday Kotak committee in 2017 as well. You must know Uday Kotak committee already. From the perspective of ethics, what is the contribution of Uday Kotak committee? Just comment your answer in the comment section. Very interesting, very important from the perspective of particularly corporate governance. So you can also mention some provisions or some recommendations of Uday Kotak committee when it comes to corporate governance in the comment section. Okay, very interesting, very important from the perspective of corporate governance, ethics, GS2 as well. Okay, so essentially these are some suggestions and recommendations by Uday Kotak committee as well. See, most of the time, these suggestions and recommendations per se are not that much important, but you must know the committee names and their overall mandate. Okay, so what on in general parlance, what Uday Kotak committee suggested, it is legal amendments to curb insider trading. They suggested some legal amendments. Okay, these are the landmark cases. Particularly from the perspective of prelims, these landmark cases are not that much important. But if there is a question in mains regarding insider trading, you must know some of these landmark cases, Supreme Court cases. Okay, the latest being Deep Industries case. The promoter sold shares before board decision on a negative announcement. Very interesting. Most of the time, it is the promoters or person in management misusing the information that they have and actually gaining through that information. Okay, SEBI penalized the promoter citing use of UPSC. Okay, ultra sensitive information. So, this is it about the news. But from the perspective of prelims, also important is to know some details or some basic about SEBI also. SEBI is a Securities and Exchange Board of India. See, this is a regulatory authority for securities and commodity market in India. When it was established, so essentially SEBI was constituted as a non-statutory body first. Very interesting, very important. See, most of the time you may get confused whether SEBI is a constitutional or statutory body. It is a statutory body, but first it was established as a non-statutory body or in 1989 through resolution of the government. Okay, presidential resolution is essentially. Then post that we have the Securities and Exchange Board of India Act of 1992, and from due to this act we have the SEBI as a statutory body. So essentially the origin of SEBI is in 1988. You must know this fact. Okay, although you must have earlier seen that there is a Thomas committee to regulate the insider trading, which was established way back in 1948. So can you imagine, that committee is that old, but we have SEBI as a statutory body only in 1992. So these are some key functions of SEBI. You already know these functions: regulating stock markets, investor protection. So essentially it regulates our stock market and essential regulatory aspect of them as well. Market surveillance is there. Preventing insider trading is another important mandate of SEBI. So this here is a very interesting question. Comment your answer in the comment section. As I said, the third statement, look at the third statement. Only company directors are considered insiders under SEBI regulations. So, when most of the time the word only is the giveaway in such statements. Okay, so that can be hint for you as well here. So the third important article that we are going to discuss is essentially about terror financing. So what exactly is this news? It is essentially review the title of this particular article itself suggests India to raise concerns against Pakistan funding with all MDBs, says official. So essentially India is going to raise the concerns when it comes to funding Pakistani investment. See, it is essentially Pakistan is ultimate hotbed of terrorism. We all know this. Essentially, they are the state sponsor of terrorism. So most of the time, the military has too much sway in the investment aspects of Pakistan as well. So many times we have seen many, MDBs, multilateral development institutions, particularly investing heavily in Pakistan. For example, Pakistan always gets bailout from IMF. So Pakistan always goes with a begging ball in their hands to IMF, and most of the time the Pakistani economy is based on IMF bailouts. Okay, there are many World Bank investments. There is ADB investment, Asian Development Bank investments in the developmental sector of Pakistan as well. There are multi-billion dollar sort of investments by these banks in Pakistan currently being operated or being operational. So in a way, what India is trying to do is India is trying to actually halt these, not halt, but review the investments to a certain extent, so that Pakistan can be much more accountable for its financing of terror. Okay, so most of the time, in recent times, rather I will say just 1 or 2 days back, there is a report in Indian Express suggesting that India is trying to again relist Pakistan under FATF's grey list. Okay, so just few years back they were under grey list, but they were removed after the review by FATF committee. But again, India is insisting now on the relisting of Pakistan into the FATF grey list. So from the perspective of prelims, we are going to see the mandate of FATF, the lists, what exactly is the what exactly are these lists and their associated sort of issues in investment. Okay, so let's dive into it. So about the news. So India intends to speak with all multilateral development banks, MDBs, to push back against providing funds and loans to Pakistan in the backdrop of Pahalgam attack. Very heinous and very condemnable attack. Financial Action Task Force. So, per se, the news from the perspective of prelims does not have that much of value, but we are going to see the background of that particular article. So in the background, we can see there is clearly, it is mentioned there is FATF. FATF is a Financial Action Task Force. It is an intergovernmental organization that leads global action to tackle money laundering, terrorism and proliferation financing. So essentially, the FATF tackles money laundering and other terror financing activities. Okay, so essentially, it is an intergovernmental organization. So background, let's see some background also. Background is it was established in 1989 by G7. So it is not a UN body, it is established by G7. G7, just comment your answer in the comment section. What are the members of G7? G7 to examine and develop measures to combat money laundering particularly. So it was established by G7. In 2001, the FATF expanded its mandate also to combat terrorist financing. So it was established in 1989, but in 2001, it actually increased its mandate and expanded its mandate rather to include terror financing and combating the terror financing as well. FATF has authority to issue warnings and sanctions against countries that fail to comply with its standards, such as suspensions, membership and blacklisting. So there is a blacklisting involved as well. See, if some country is essentially blacklisted by FATF, what that means and what that also indicates to the investor is that the particular country is politically unstable. It is in a way in the grip of political instability, criminal instability, terror instability rather, and that way the investment sentiment in that country will be at all time low. So if some country is listed under grey list or blacklist, essentially it indicates the country's favorability for investment as well. So most of the time, many global investors take cues from this list. So in a way, the grey listing or even blacklisting will essentially affect the country's FDI, FPI flows as well. So that way, those sort of actions becomes much more forceful. Okay. So FATF members, the originally included G7 countries, European Commission and 8 other countries. Currently, it has 40 members, including India. Recently, Indonesia has become member of FATF. Very interesting, very important from the perspective of prelims. You must know there are currently 40 members, Indonesia being latest, India is also the member. Okay, just know that. What are these grey list and blacklist of FATF? So what exactly is blacklist? Countries known as non-cooperative countries or territories are put on the blacklist. See, essentially, after the repeated suggestions, say, or repeated recommendations by the committee of FATF, if the country does not change its policies, stances when it comes to money laundering or terror financing, they are blacklisted. These countries support terror funding, money laundering activities. Obviously, they, despite pointing it out, if they are not doing anything, they are blacklisted. Grey list is there as well. Countries that are considered safe haven for supporting terror funding and money laundering are put on FATF grey list. So blacklist is much more severe. Grey list is sort of a mellow version of blacklist. So it is they are considered as a safe haven for supporting terror funding and money laundering as well. So essentially, both, if some countries are listed in these lists, essentially it indicates that it is an indicator to the investors that the investments are going to go down, or they are not worth it. So essentially, let's now see briefly some multilateral development banks and the year they are actually came into being, key functions and tools associated. Okay, very important from the perspective of prelims. But before it, we are going to see some international organizations which are involved in combating terror financing apart from FATF. Okay, so essentially there are many UN and UNSC resolutions. See, UPSC has habit of asking the questions like what exactly is resolution 1373 or 1267 associated with. So essentially it is associated with terror financing, that you must remember. Okay, so essentially these are the resolutions 1373 and 1267 resolutions. What they seeks to achieve is global framework to sanction terrorists and freeze assets. Okay, so there is International Convention for the Suppression of the Financing of Terrorism, which came to be in 1999 as well. There is Egmont Group of Financial Intelligence Unit. In India, we also have Financial Intelligence Unit as well. So by the way, comment in the comment section, it is under which ministry or department, Financial Intelligence Unit in India. So there is, at international level, there is Egmont Group. There is in Asia Pacific Group on Money Laundering as well. So all these groups are also very, very important. Okay, which are involved in studying the terror financing and taking action on it. Okay, as I earlier said, we are also going to discuss some multilateral development banks and their mandates essentially. So first is obviously World Bank Group establishment, Washington Consensus. Through Washington Consensus, it is one of the foremost post World War II institution, headquartered in Washington DC. So the mandate is also very important: to reduce poverty, support development by providing loans, grants and expertise. So World Bank provides loans, grants and expertise. There is IMF as well. IMF, it is essentially established with World Bank Group, again headquartered in Washington DC, ensure global monetary cooperation, financial stability and facilitate international trade. So this is the mandate. So in IMF, there are credit facilities. Per se, they don't provide, development or poverty or, other grants or supports. Okay, so essentially these are credit facilities the IMF provides directly to that particular country. There is Asian Development Bank as well, which was established in 1966. By the way, ADB is headquartered in Manila, Philippines. Very interesting, very important. By the way, in ADB particularly, just comment in the comment section whether China is member or not, and who holds the largest share in ADB. Okay, very interesting, very important from the perspective of prelims. There is African Development as well, bank as well. There is very interesting and important European Bank for Reconstruction and Development, which was established in 1991 and it is headquartered in London. New Development Bank is there. It is headquartered in China. See, it is essentially a BRICS bank. Okay, BRICS Bank, New Development Bank. So how NDB is different from ADB? NDB versus ADB. This is also very interesting and very important comparison here. So in detail, you must do the mandate, the members involved, who holds the largest share in that particular bank. All these issues are very important, very interesting, and very, I will say, very important from the perspective of prelims. Okay, there is Asian Infrastructure Investment Bank as well, which was established in 2016. Again, it was headquartered in China. So you can see, how many of these banks are headquartered in China. So as China is emerging as a global sort of, global hegemon, it is also seeking newer investments of its own. Okay, and we know it's huge projects, whether it is CPSE or BRI, or whether it is a Silk Road project as well. So all these are financed by Chinese debt most of the time, and China is often accused of debt trap diplomacy. So most of the time China is actually flexing its financial muscles as well. So that's why these newer banks have their headquarters in China as well. Very interesting and very important. By the way, few years, just 1 or 2 years back, I think there is a question on IMF's financing as well. So essentially, what are the facilities provided by IMF in that context is very, very important. See, there are standby arrangements, there is extended fund facility EFF, there is rapid financial instrument, and there is extended credit facility. So ECF, RFI, EFF, and SBA. All these are instruments, facilities provided by IMF so that they can actually provide relief to the affected countries. So see, the duration is important. Particularly standby arrangement is for 12 to 24 months. Extended fund facility is up to 4 years. Rapid financial instrument is a single disbursement, just single disbursement. And ECF, extended credit facility, is up to 3 to 4 years. So essentially, these funds and their names are important. Just remember the names, and we have also mentioned the purpose here. Not that much important. You just remember the terms associated. Okay. So this again is a practice question. It is asked as a part of PYQ as well. I think in 22. I think, yeah, true. So very interesting, very important PYQ here. Just comment your answer in the comment section. So the next important article that we are going to discuss is brain-computer interface. See, from the perspective of prelims, you must know what exactly is this brain-computer interface, and what exactly is this technology from the perspective of science and technology means as well. Okay, so what the current news is, Indian scientists helped to develop brain-computer interface that aids movement of people struggling due to paralysis. Okay, very interesting, very important, health related development as well. So from the perspective of science and technology, that is important. This is important news. So as I said, this framework that they have developed in University of California, it allows paralyzed man to control a robotic arm for 7 months straight using just his thoughts alone with minimal calibration. Can you imagine the level of technological achievements that we have achieved in recent years or recent days? Okay. So how exactly does this technology work? So brain-computer interface. To start with, the team tried to understand the neural patterns behind the movement. Obviously, you must have heard the terms artificial neural networks. Okay, Neuralink and Musk's investment in that chip and all those things. So essentially, that is also, by the way, brain-computer interface as well. So essentially, the team tried to understand first the neural patterns. Obviously, you have to understand the neural patterns before actually plugging in the computer system or AI system. They analyzed how activity, in the brain day to day as the study of participants repeatedly imagine making specific movements. Okay, so they just analyzed various movements and they mapped the neural networks in that regard. The study participant had tiny sensors implanted on the surface of his brain. Obviously, there are invasive methods and there are non-invasive and there are semi-invasive methods as well when it comes to the brain, when it comes to these implantments of these chips. But in this particular study, they actually directly implanted through invasive methods the chips on the surface of brain itself, so that they can map his neural activities. So once the machine learning AI algorithm was programmed to account for those shifts, it works for months at a time. Okay. So after analyzing those neural networks and with the help of AI and the programming associated with it, they are able to analyze the shifts, and accordingly they, sort of read out signals were then decoded to actuate robotic arm, and then they feed that signal to the robotic arm. So essentially, through months of data collection and months of mapping these neural networks, they are able to, with the help of AI, feed this particular data to the robotic arm, and eventually the participant managed to control a real world robotic arm execution in action. So essentially, this is the illustration here. So essentially, through the brain, through just thinking, this person who is, obviously paralyzed is able to control this bionic arm, okay, robotic arm. So this particular slide here, as I said, briefly mentions what exactly is BCI, brain computer interface. It is a computer based system that acquires brain signals, analyzes them and translates them into commands, sends those commands to external device to carry out desired action. As I said, it is a computer based system, okay, with the help of computer. If some person is paralyzed, say you must have seen Stephen Hawking and how he used to communicate. Although, in his case, the system was different, but otherwise also the paralyzed person, even in that case, in case of the paralyzed person, essentially by mapping his neural networks and all those things with the help of this particular technology, we are able to actually give him some sort of movement. Okay, because otherwise, he is sort of paralyzed. Okay, BCIs enables to users to control devices directly using brain activity, bypassing body's muscles and peripheral nerves. Okay, essentially, they bypass peripheral nerves and body's obviously nervous system. So BCIs can be broadly categorized. As I earlier said, there are multiple categories of BCIs. There are invasive, there are non-invasive, and there are partially invasive as well. So as the diagram here rightly conveys this particular aspect of invasiveness. So what exactly is this blind sight? So when it comes to latest development, Neuralink's blind sight device is an experimental vision restoring implant designed to restore sight for those who have lost their vision. See, this technology is going to revolutionize the health aspect going forward. So currently, what this blind sight of Neuralink does, it actually restores vision in those people who have lost their vision already. So for example, damage to optic nerve or lost the eye in the accident or something like that, those sort of patients can heave the sigh of relief now because they have blind sight now. Okay, so essentially this device uses a micro electrode array implanted in the visual cortex. Okay, again it is bit invasive method. So essentially just from the perspective of prelims, just know blind sight is the Neuralink device which restores vision. That's it, nothing else you have to remember. So this particular question here addresses your own understanding of the concept that we are discussed just now, brain computer interface. Just comment your answer in the comment section to this particular question. So in the decoded section, we are going to discuss very interesting and very important article that was on the editorial page of the Hindu. It talks about strengthening India's parliamentary oversight. So essentially, see, in India's parliamentary system, the system of checks and balances is the foremost vital character of our democratic governance. So the parliamentary oversight over the executive action is also very, very vital. So through various instruments, so in a parliamentary democracy, the parliamentary oversight is very, very vital, so that parliament can make the government, the executive, accountable to the people itself. Okay, that is the foremost work of parliament, so that our system of checks and balances produces working democracy, good governance based democracy. Okay, so this article is important from the perspective of prelims. Most of the times, working of parliaments, lack of oversight over the government action, misuse of parliamentary supremacy by the government, by the party in power is often of interest to UPSC. So particularly we have this particular PYQ here. It actually talks about to what extent in your view parliament is able to ensure accountability to the executive in India. As I said, the foremost function of parliamentary parliamentary oversight is to hold the government accountable for its actions. So to what extent government is able to hold the government, or the parliament is able to hold the government to account, is also very, very vital aspect, okay, when it comes to UPSC mains. Okay, so what exactly is this article is arguing is parliamentary oversight in India refers to the process by which parliament scrutinizes and holds accountable the executive branch. As I said, essentially through this oversight, government, or parliament holds government to account, okay, for its actions and policies. Crucial mechanism to ensure what? Transparency, accountability, and proper functioning of government. Proper functioning of government, which is answerable to people. See, now the answerable to people, in a way, answerable to the people through their representatives in the parliament. Okay. So, this particular chart here addresses the issue of the mechanism of parliamentary oversight in India. There are some instruments you must be knowing. We are not going to discuss all these instruments. There is question hour, there is zero hour. Essentially you must know what is the difference of question hour and zero hour. When they are, discussed exactly, who answers the question, what are the starred, unstarred questions, what sort of question are asked under those headings as well. Those are important from the perspective of prelims. But from the perspective of mains, you must know the mechanisms available to the parliament to hold the government to account. So there is question hour, there is zero hour, there are debates and discussions, there are parliamentary committees. See, the issue of parliamentary committees is again very, very vital. So from PAC, Public Accounts Committee, there are other very important committees as well. There are ad hoc committees. So these committees and their functioning and working, whether they are effective or not, is often also the area of interest as well. So you must have seen in the questions in prelims as well, the questions in mains regarding the effectiveness of the committees. Okay, very interesting and very important parliamentary oversight mechanism. There is motion of no confidence, censure motion, there are cut motions, and there are budget and appropriation scrutiny. See, the parliament, particularly Lok Sabha, holds the power of purse to certain extent. So parliament can hold the government to account from that budget mechanism as well, budgetary mechanism. And there are obviously the discussions and debates. As you know already, 3D is the mandate of parliament: debate, discussion, and deliberation. 3Ds. Very interesting. Our prime minister is using these sort of short forms a lot. And you also prepare from the perspective of mains some of these short forms, so that you can use these directly in mains, so that it can make the overall conversations much more interesting. See, this particular site here, from the perspective of mains, you must know why parliamentary oversight is needed in India. What is the significance? It ensures executive accountability. Obviously, we have seen it multiple times through debates and discussions. It prevents arbitrary use of power. For example, here I have mentioned particularly the no confidence motion against the Morarji Desai government in 1979. So that way you can directly hold the power to account. Then there is, it promotes transparency and governance. Debates compel the government to disclose information. For example, RTI amendment bill discussions, you must know that. Ensure financial discipline is, again, as I said, the review, CAG review, the committee recommendation, committee deliberations, committee report deliberations in particular, budget appropriations, all these actually ensures financial discipline to a certain extent. It improves policy outcomes. Okay, there are again committee reports regarding that. Represents public interest. Obviously, there are MPs who are the representative of people. They can ask directly questions to the government as well. Uphold separation of power. As I said, the system of checks and balances is very, very vital when it comes to Indian democracy. So it upholds separation of powers to a certain extent as well. Although, parliamentary oversight has often falls short. There are multiple reasons why it falls short. So in this particular article, it mentions some of these reasons. The first reason being question hour is frequently disrupted. Okay, question hour and the disruption and parliament is, you may already be knowing, we have seen the shouting match in parliament. Most of the time there is no structured, well-studied discussions on many issues. Most of the time there is ruckus in the parliament. So in a way, question hour is a casualty in that regard. So one statistic here is mentioned, question hour functioned for 60% of its scheduled time in Lok Sabha and 52% in Rajya Sabha. It is the data for 17th of Lok Sabha. Can you imagine, just when it comes to question hour, there is just 60% productivity. Okay. And that too in Rajya Sabha, it is much more severe. It is just 52%. Okay. Individual MPs tend to focus on isolated queries. Okay. This is another, very interesting and important points pointed out in that particular editorial. Limited influence of parliamentary committees. As I said, parliamentary committees have very limited influence. Why? See, because those committees are post facto deliberation committees. So essentially, to certain extent, and the committee recommendations are not per se mandatory. Many times, the committee reports are not even actually discussed in the parliament. So many times, the committee's recommendations are just there for the history books. Okay. Committee consultations tend to engage a relatively small group of stakeholders. Obviously, this is another issue. Temporary structure of committees limits the ability of members to develop both expertise and institutional standing. Very important and very interesting. Most of the time, the committee members are there for just 6 months or 1 year. So, short-term membership creates the issue of, sort of lack of expertise. Parliamentary committees reports are often not taken up for discussion. As I said, most of the times those are not taken up for disruption. Why? Because most of the time the disruption is there. The disruption is so severe in recent years, the committee reports have been ignored a lot of the time. But there are some successes as well. For example, Standing Committee on Railways recommended waiving dividend payments by Indian Railways in 2015 to improve financial health. See, when it comes to success of committees, you must know some of these examples. Okay, particularly when it comes to action, when it comes to questions in UPSC mains. See, many times you will be able to write the points, but you have to substantiate those points with the examples. These are the examples here which are very, very important. So note down these examples and use it whenever there is question or question to critically analyze the working of committees in Indian setup. So, for example, all these committees are there, particularly PAC, Public Accounts Committee, very interesting and very important committee. On average, the PAC has made 180 recommendations every year in the past 8 years, out of which 80% were accepted by government. This data is important. You can directly mention that, although the committee recommendations are not per se fully discussed in Parliament, but we can see the importance of these committees by seeing that PAC in particular, it has recommendations above 180 per year, every year since last 8 years, and mostly 80% are accepted. Can you imagine? 80% committee recommendations are accepted. Most of the time, the committee's recommendations, it is the secondary deliberative body. Okay, there is much more focused discussion in committees on the particular issue. There can be, expert deliberations as well. The committee can ask the experts for their help for the deliberation. So most of the times the committee's reports are holistically able to address the issue properly, and they recommend very interesting and very innovative, effective solutions. So they hold, good, not just academic value, as we earlier said. They are not just for history books, but if the recommendations are implemented in a proper spirit, in a good spirit, then they can change the whole system itself. Okay, but how to make oversight truly robust? So robust post legislative scrutiny is very, very important. The formal process to track whether laws are achieving their intended impact. Okay, so there are some suggestions here which are very, very important. Subcommittees under each standing committee or a specialized body to review implementation can be created. Okay, so we can again create subcommittees for whether the recommendations are implemented or not. So committees and subcommittees should be, in sync. Strengthening and institutionalizing committee work. Very interesting, very important. Making oversight findings more accessible through transitions in local language. See, most of the time, what happens is these committee reports are not available in local languages. So many times the reach of these recommendations is also very limited. As you know, most of the time, not all people in India understands English. So from the perspective of inclusivity, also these committees and recommendations reports of these committees can be translated to local languages. The AI can help as well in that regard. Select DRSC reports should be brought to the floor for debates. Okay, they must be debated. Okay, select committee reports can be debated with a mandatory response by the minister concerned. The article suggests that mandatory government, the ministers, obviously the representative in the parliament, must respond. Okay, strengthen committees with dedicated research and technical. This is interesting and very important aspect. Okay, so if you want to strengthen the committee working, this the dedicated research and facility, technical support facility should be created. Okay, apart from the subcommittees for the recommendatory purposes and other things. Okay, so adopt technology to empower MPs. Very interesting. As I said, AI can help a lot. By leveraging AI data analytics, Parliament can help members swiftly flag irregularities, track policy trends, frame sharper and evidence-based questions. Okay, so these are some suggestions given in the article. Very interesting, very pointed suggestions the article has given. See, most of the time the article focuses much more on the committee work. So the problems with committees, although article also mentioned some success of committees and how to further improve the committee's recommendations and in a way parliamentary oversight overall. Okay, so to conclude here, strengthening legislative oversight means honoring the mandate citizens have given their representatives to make sure the machinery of government stays transparent, accountable and truly of the people, by the people and for the people. See, this is the mandate of parliament. So essentially, to hold the government to account is the foremost oversight work that parliament has to do, so that the government, our democracy becomes truly the people's democracy. Very interesting, very important article, okay, from the perspective of GS2. This is the practice question. Along with maximum governance, there needs to be maximum accountability. So, which must start with empowered and effective parliament. You have to comment on this particular section. The effectiveness and empowerment of parliament, okay, and the oversight work they do is important area from the perspective of GS2 mains. So that's it from my side. Stay tuned for daily news analysis and like, share and subscribe to our YouTube channel. Thank you. Thank you so much.